As of the published date of this episode, I am an associate of Ulta Beauty. The ideas and thoughts represented here are my own and not that of my employer.
Hi, everyone, and welcome to the Scaling Emerging Beauty Podcast. This is a podcast that provides early-stage beauty brands with actionable insights and strategies as they're growing their brands from 0 to 20 million. For today's episode, I talk strategic financing options with Jackie Bay of Lunr Capital. Here's a little bit from our conversation.
Networking early is just an incredible way to get on people's radars, and then they'll be able to watch your growth from afar. And when the time is right and all the stars align, everyone's ready to go. We've seen that in our space as well. A brand comes to us a little early, but definitely has these great upcoming conversations with big retailers. We can advise them on the metrics that we need to see or what would be the path to yes for our partnership. And then they go out and do that. The expectations are clear from the start. They achieved it, and we're able to showcase the growth and the strength in the business that we need to see. And then they're ready to go for that year that they were building the relationship and on the product line for retail.
Now let me tell you a little bit more about Jackie. Jackie started her retail career managing inventory at Target. She currently leads client success at Lunr Capital. I'm so excited for you all to hear this conversation today because there are so many different funding options available, and we don't always hear them being discussed in the founder communities. So we talk all things inventory financing, and we also talk a little bit about what things you should consider as you're thinking about some of the ways that you can finance your growth as you're looking to scale and grow at retail. I know that every brand that listens to this episode might not be ready for this type of financing, but this is one of those episodes that provides helpful information as you plan for the future. After a brief thank you to our sponsor, we'll get right into the episode. I hope you enjoy. I'd like to take a moment to thank the sponsor for the Scaling Emerging Beauty Podcast, the Emerson Group. Through their support, we're able to continue to talk to industry experts to provide early stage brands with strategies and tactical insights on what they can do to help their business grow better. Thank you again to the Emerson Group for their continued support. And let's go ahead and continue with the show. Jackie, thank you again for joining me on the podcast today. I'm really excited to talk about funding on this episode. It is such a critical topic when it comes to brands, especially in the current economic environment. We're recording this here in June of 2024. So I'm excited to talk about Lunr Capital and understand how your organization helps brands with funding. Mm-hmm. So first, would like to just start off with a general overview. If you can explain the story behind who Lunr Capital is and what specifically inspired you all to focus on providing different types of financing solutions for consumer product brands.
Yeah, I'd love to start that. So our founding partners are Jeff Kleinfelter and Michael Hoffman. They have this incredible background and decades of knowledge in this consumer space, which led them to create a venture fund. They first invested in this rapidly growing consumer company. It was going from 0 to 20 in revenue the first year, with huge opportunities in retailers such as Target and Walmart. And with that, they were raising a ton of equity, really early dilution, and they were spending a lot of that on inventory. And that exact transaction was the impetus for Lunr. How can you come in and support this, this rapid growth, absolute necessary piece of it all, the COGS, the inventory, without diluting your brand, especially if you're an emerging brand and it's year 1 or year 2. So that was the impetus for Lunr and how we started. But having that investing side, they also needed to have team members who understand all the retail hurdles that a consumer brand will face. So that comes in the rest of the team, myself included. I had 6 years of experience at Target, and when I came into Lunr and was learning about how we could be enabling these amazing brands, whether it's differentiation in clean ingredients or if they're producing something that's, heartfelt to them, their own health issues or their own struggles, that resonated well with me too, because the last team I was on Baby, the best brands to work with were the female-founded brands for women, by women, addressing the female need. And I was just like, this is it. This is the best possible job to enable these passionate, founders building products for the rest of the consumer base that can totally benefit from it.
Thank you for sharing that, Jackie. I didn't realize the background of your co-founders. Mm-hmm. And to your point, it's so helpful when you have context. So you either are a fund or you've been an entrepreneur where you've had a brand yourself before. And it really hits on such an important point, which is that many early stage brands, if you didn't know, this is the T, if you will, is that inventory is a huge, huge money. I don't want to call it a money suck, but it's a huge part of funding your business growth.
It's a burden. You could have 3 to 5 months of a cash outlay because you put the first deposit at the factory. And then with all your terms and shipping and everything, it might be 5 months later before you see $1 of that come back.
That part.
Yeah, that part and that bridge is what we are trying to address. It's a necessary step to be successful in omnichannel.
That's so critical for brands that are looking to succeed today, especially brands that are looking to leverage retail partners as a way to fund growth. I think it's a little bit different for DTC because you don't have the same terms in terms of producing, when payment is due, and how that life cycle runs. I'd love to understand how Lunr Capital differentiates themselves from traditional financing options, especially for emerging brands in terms of some of these fees and structures or repayment terms like we've kind of alluded to.
Totally. I'd say our biggest differentiation and, the founding story for us is that we have ex-retail team members. And we understand what it's like to be at the seat of bringing in brands. There are people who've also sat in the seat of bringing brands into retail, selling in. And our background and knowledge is just like leveling the language. We're able to speak the same language as our founders and really walk through what that next 4 to 5 months could look like and how our financing will be able to support all those different steps leading up to it. One piece of it is you're going to start building inventory as a consumer brand months before you see a purchase order from the retailer. And there's many different indications that you have business, right? It's the store count, it's the forecast. And we understand that. And we were at one point the people providing that information to those brands. So I think those pieces, along with understanding that as a consumer brand, you might have these big seasonal buys. You might have an additional inventory build for a secondary location, an end cap. You're planning your promo lists. All those things are pieces that we've lived through and understand. And so I think that's where our clients and our brands feel the safest, is that we will be able to help them through not only the financing part, but we understand what all that means. I'll pause. I guess the repayment terms and how that can look, we try to build that around the supply chain and cash conversion cycles of our clients and making sure that it really fits with their business, intending for it to be the short-term recycling funds type flow.
Thank you for sharing that. That's really good. And I know you just talked a bit about the background for the folks at Lunr, which is really impressive. I know you all have hired folks with a variety of backgrounds on the brand side and the retail side. And so you really partner with the brands that you provide financing to as a strategic partner. So yes, you provide financing, but you also have a wealth of other tools available that really help support brands beyond financing. Can you talk a little bit in more detail about what some of that support looks like and the role that Lunr plays as you help these brands on their growth journey?
Totally. And I think the one piece too is that any brand looking for a partnership that's additional to their team should be able to help them beyond that service. It's a support arm. You're bringing in another additional team member, it feels like, to, help you grow and accelerate your business. So I'd say first, being ex-retail, we have the experience and we've lived through some pieces so we can advise brands on what that will look like. Our retail network is very close to us as we're in Minneapolis ourselves too. We're located in the North Loop. So we love to figure out how to connect our clients to services, people, ideas that we've seen. I think the most valuable piece is that we're sharing exactly what our other clients are going through for the first time, or what they might be experiencing in that exact retailer, what the challenges of the flavor of the day challenge, it might be the chargebacks, it might be the shipping terms that you want to be on the lookout for, it might be all these different programs that are available, whether it's the accelerators, all those resources that are out there, because we're hearing it firsthand from our clients as well. So I'd say that strategic piece of our financing is very fun because it's consultative and collaborative. I'd say specifically in my role, I have a long history in demand planning and inventory planning and forecasting. So being able to connect all those dots and helping how that future fund, that financing, or that future advance we might send out for that inventory, we're all making sure we're on the same page. What does that look like? Weeks of supply. How do future sales look? What are projected sales? What's the past sell-through? All those things, and pulling that together and make sure that the story makes sense.
I'd like to go off script a little bit here because I know you have a background in demand planning coming from that inventory side from Target. How do you work with some of your client partners when it comes to that demand planning aspect? Have you ever had a scenario where you've seen a forecast and you've gone, that's too high, or you've gone, that's really too low, you should plan for a significant refill? And talk me through what one of those conversations might look like, or how you might help brands, or things that they can look out for if they're getting a PO from retail and they're saying this feels too high or this feels too low, it feels just right. Talk to us just a little bit about what your feel is for understanding what forecast is the right forecast.
Totally. I think that the best approach would be having kind of a three-pronged scenario, like what would be the highest high? Could we support that? And then what's the absolute downside scenario? What does that look like? I'm not sure if I have the magic 8-ball or the crystal ball to say, like, your forecast is going to go exactly to plan and everyone's going to react to it as expected and how it's mapped out. But I'd say if we know what the highest high possibility is and the absolute downside scenario, are we prepared for both? Is there a safety stock option that we're able to make sure that we have on hand? Is there multiple channels that this inventory can go through if we're in the downside scenario? Are you only in one retailer? Are we going to be stuck with this? Things like that are the considerations and the questions that we try to pull in the beginning, especially if it's the first time going into the retailer and that's their first time in retail, period.
That's really, really good and so helpful, because I know from conversations that I've had in the past, especially, getting those forecasts right is so critical. And I love how you frame that in terms of what could be the highest high, what's the lowest low. None of us, can really predict the future, unfortunately. So, we do our best based on previous information. And I know retail teams can sometimes partner and help with that based on their category performance, based on what they're seeing in the market. They can provide some of that. So for those listening, you're not just typically, walking in there without any idea whatsoever. But it also is helpful to have a partner who might be able to give you some of these other things to consider as you think about planning for a best case scenario and also a worst case scenario.
Yeah, like one of our beauty brands went completely viral on TikTok, which is the blessing and curse, right? Everybody's aware, and it's like the retailer was like, product extensions, all stores, velocities at an all-time high. Okay, how long is that going to last? And that was the the conversation we had to keep maintaining. I was like, we're just climbing at this very positive double-digit comp week over week. Is that truly how it's going to look for the remainder of the year? And making sure that we were taking a step back and recognizing that that may not be how the rest of the year looks. All things tend to even out after a certain high peak such as that.
Yeah, that's really, really good. So as we kind of talk about growth and talked a lot about inventory, what are some other factors that beauty brands should consider when they're determining their financing needs and their strategy for growth?
Key factors I think that beauty brands should consider, I guess, would be, what are you trying to address? There's so many parts to retail success. There's obviously inventory, there's marketing, there's your team members, the execution of it all. What are the most important pieces that are going to make you successful? And then where do you need to find the funding or financing to plug those resources in? Financing vehicles are great methods to address things like big cash outlays like we talked about before, but we can't address execution. You're going to have to make sure you have the right team in place to understand if things aren't going to plan, if your unknown costs that come as a surprise, chargebacks, all these things that happen in retail that you have to be prepared for what you're not sure of too, I would say are the things that you also have to keep really top of mind too.
I think the chargebacks and some of the costs for funding promotions are some of the biggest surprises that I've found in my conversations with founders, just because unless you've come from retail and you've been on either the retail or the brand side where you sell into a retailer, you don't recognize that, if people return product, especially in beauty, oftentimes that product cannot be resold. And so that means that return is being processed as a damaged good. Mm-hmm. And mm-hmm. brands fund those damaged goods for mm-hmm. many retailers. Mm-hmm. And so that's a cost that as a brand, you got to factor in. And I know that there are some industry standards in terms of, I think the term that I used back in the day when I worked with brands was factor in roughly 5%, of sales to be damages. But there's trade spend, as you talked about, for marketing. There's also the execution. If you are at a specialty store, perhaps, and you want to make sure that things are set appropriately, so you might have to sometimes pay for a field team. So there's definitely additional costs that go into that. And it's important to understand what's going to be the biggest lever that's going to drive your success as a brand ultimately.
There's so many options, right? I mean, Lunr is one piece of the pie, the debt for inventory, but if you're able to secure venture funding for innovation, your team, for marketing, that's a wonderful option. It's incredibly competitive. It's getting increasingly hard, but there's a lot, there's a lot of funding options that are out there. And I would say, as I mentioned before, is that I would hope that every financing partner you bring in can double as a really strategic thought partner to help drive the business as well. And so I would say keep that top of mind too as you're picking who these partners could be. Have them, be that next thought partner that you could utilize as well.
On the topic of thought partners, I'd love for you to share some of the success stories that Lunr has had in working with some of your clients and just how those brands have used the funding from Lunr's financing to propel their growth in the retail market.
I'm super proud of a lot of the success stories that we've been able to see and the accomplishments and the unlock that Lunr's been able to provide for these founders. Just bootstrapping your business is incredibly impressive, but how does that happen? I'd say one of the biggest pieces and accomplishments I'm seeing is like the first year they're having their foray into retail and it goes well. And now they're able to go into the next retailer, the next account and say yes and have us as the backup for whatever door count or products they're going to bring in, knowing that they have a financing arm to support that. And as you know, your first day or set in a retailer, you really need to make a good impression from day one because that kind of sets the tone for the next 6 months of review. No one wants to assess a brand that's 4 weeks out of stock. It's hard to determine what that would have all looked like. So us being able to be that, background, go out and find those new accounts now that you know that you can support them has been really rewarding for us to watch as well.
Yeah, I love that. And that's a really good point, because oftentimes when you see that success and you know that things are going well, the next option is typically let's expand and let's sometimes go somewhere else, or let's grow within the retailer that we're already at. Maybe let's grow in our door count. But then that growth still requires additional funding. So it is really nice to know that you have a solid partner that you can reach out to for that funding. And then again, with regards to financing, as you alluded to earlier, Jackie, you still need additional financing options for the marketing and to make sure you're still promoting, if that's a part of your business model as well. So this is, again, just one piece to help you succeed, but still a very critical one.
Totally. And another very fun thing to watch for our brands is just product innovation or extensions. And I can geek out on that because that was the most fun part of line review when I was at Target, was saying, okay, that was amazing. What's next? What's to come? What are you building on? And how are you addressing that next need that we all need or want to buy? That's been super fun to see too. Just, okay, this was the best core product and this now is living in this family of this, is it the moisturizing? Is it hair removal? And how that can go in a million different ways.
Yes, I agree. Innovation is always like
super fun.
Bright spot, like, ooh, what's shiny, what's new?
Yeah, totally.
So much fun. So I'd love to just hear from you. We've talked a little bit about what things brands should look out for or for them to consider in terms of looking for strategic partners, how you want someone who can provide financing, but can also help with additional things. I'm wondering if you can expand on that a little bit and just share some advice that you would provide for these early stage brand beauty founders that are looking at financing options for retail expansion, especially as they're navigating the current complexities when it comes to, the funding landscape.
Totally. And I love your LinkedIn, Monique, because I feel like you put a lot of the basics out there. Have you actually done the research to get retail ready? And you know that it's going to be at least another year before you launch into retail. So my advice would be start early. How do you start to network and have those conversations with different funding partners and understanding the why or what they're looking for so that you can start to build over that over the next few years? And we've seen that in our space as well. A brand comes to us a little early, but definitely has these great upcoming conversations with big retailers. We can advise them on the metrics that we need to see or what would be the path to yes for our partnership. And then they go out and do that. And I think that's a win-win. The expectations are clear from the start. They achieved it and we're able to showcase the growth and the strength in the business that we need to see. And then they're ready to go for that year that they were building the relationship and on the product line for retail. Networking early is just an incredible way to get on people's radars, and then they'll be able to watch your growth from afar. And when the time is right and all the stars align, everyone's ready to go.
That is really good advice, especially because in retail, so much of this is a relationship-based business. It's like as a brand, you're partnering with a retailer, you're partnering with different organizations or angel investors who might be funding and investing in your brand and business. And so considering those things early on, almost like as if going into these conversations for financing, understanding, I don't know what their expectations are or what their requirements are. Let me first see, are these people that I like?
Yeah.
Let me, then see.
Are they normal?
Exactly. Like, do I like them? Do they like me? Then next question is like, what are their requirements and what are their expectations? Am I checking those boxes? If not, okay, how do I go back and make sure those boxes get checked so that I can come back? Or if I am, great, it's a win. We can kind of move forward. But I think sometimes the challenge in retail as brands are scaling is that there's not always an understanding of what the requirements are.
Totally.
And so brands might go into conversations assuming it's a yes, and it's like, we're not quite there.
Right.
And that can be discouraging, but I would say great advice to say start early so that you understand what the requirements and the expectations are. Not that you all, founders, you don't have too many things on your plate. That was sarcasm if you didn't catch that. But it's another part of just the strategic business plan, if you will, as a founder, if you're looking at funding, is just to have those conversations early. Even if you are DTC and you're saying retail is a few years out, start reaching out to say what is needed so that when I know that I'm in a place to receive funding, you're not in a bind where the time is, not working on your side and you have maybe an opportunity with retail, but you don't necessarily have the funding in place because you didn't hit those other benchmarks that some of these financers offer.
Totally. Yeah.
Yeah. So I'd love to ask just like a big picture question as we get ready to close out, just about like future financing and all of that. So I'm curious as to how you envision future financing for beauty brands. And I'd love to understand how Lunr Capital plans to evolve to meet some of the changing needs of the industry, just as like a fun question, because we know it's wild out here.
Yeah, it feels like it's changing every couple years, what the priorities are, what's working. So the future of financing is ever evolving as consumer behavior will continue to change. How is the consumer shopping? Where are they buying things from? And I would say I would want brands to continue to look out for financing solutions that are keeping on top of the industry and the changing landscape of how people are purchasing their product. In terms of how I think Lunr is going to evolve and continue to meet the futuristic needs of consumer brands and the consumer, well, the first thing we've done is we built a tech platform this year and launched it, and we're building upon it so that the funding process is very seamless. But there's definitely this incredible data play of how do you make sure you're making the right choices in your business, whether it's insights that we're able to provide and overlay on top of it all. And, we want to make sure that we keep a really good pulse on how the consumer is shopping. In 2020, it was all online. Then everyone was like, okay, omni-channel is king again. I know that this isn't the end, right, in terms of how the behavior will change or evolve. So we're going to make sure that we know exactly where the consumer is searching for product and making sure that our financing packages meet however that looks going forward.
Yeah, I mean, who knows? Like, I would say 10 years ago, if you would have told me that I'd be able to go to a store and drive up to have everything shopped for me, I would tell you that sounds like a future that would be amazing, but I'd say no way would retailers do that. Like, no way is that going to be, actual functionality, but it's here. And maybe it's not 10 years, maybe it's 15 years ago, but you get my point. Things are definitely evolving, and it'll be interesting to see as things continue to evolve. I know there was some talk about the metaverse a lot, like 2 years ago, in terms of is shopping going to happen on the metaverse? As gaming continues to evolve, maybe that's the place where people continue to shop on games. We know that TikTok shop is a thing, but then TikTok is also going through. Is it going to be banned? I mean, to your point, we don't know what the future holds, but there's so many different options and opportunities out there that it's going to be exciting. And my hope is that these options or channels that allow brands to sell their items really allows them to thrive and be profitable and connect with more consumers. Because to me, at the end of the day, like, that's the goal. We want to connect consumers to good products that they didn't know that they needed, and products that, a lot of these emerging brand founders have worked really hard to create and make available to folks.
Totally agree.
Yeah. Well, look, thank you so much for the conversation today, Jackie. If there are any social handles or any places where folks can find Lunr Capital, I know the spelling is a little bit unique. We can go ahead and call that out now, and then it'll also be included in the show notes, of course.
Yeah, so Lunr is LUNR, we dropped the A. We have a blog on our website. We're very active on our LinkedIn. So you can find us in those two places, Lunar Capital.
Thank you so much, Jackie. I appreciate it.
Thank you.
Thank you again to Jackie and Lunar Capital for talking about their options as they support emerging brands. It's so exciting to me to have different folks come onto the podcast and share the different options that are available. Sometimes knowledge really is power, and I'm hopeful that this information provided you or your team help today. If you found this episode helpful, please do me a favor and leave us a review on Apple Podcasts or Spotify. Also, feel free to share this with a friend or a colleague. As always, thank you for tuning in, and I'll catch you on the next episode. Bye.